Welcome! In this video, we're going to be talking about what happens to CPP when you die. Now, this is a bit of an uncomfortable topic. We don't want to think about the death of a loved one, of a partner, or a spouse, but it's a very important part of retirement decumulation to understand what happens to your CPP benefit if you were to pass away unexpectedly in retirement. What does your spouse and partner receive? What are they going to get? It depends on your age, it depends on their benefits. There are a number of factors that we need to take into account when calculating CPP survivor benefits. In this video, we're going to take a look at the calculation, so pre-65, post-65, what that looks like, how it integrates with your survivor CPP amount, how that integrates with your CPP pension, and how that could be a lot lower than what you expect. So that's the big thing in this video, is that what you get from CPP survivor benefits might be a lot lower than what you expect in retirement, and we need to take that into account when building a good retirement decumulation plan. Now, before we get into a detailed example, I want to show you on the Government of Canada website how the calculations work. So here on the Government of Canada website, we're looking at the survivor pension example. We're just going to walk through the different types of survivor benefits that you could expect in a survivor scenario. So if you are in a survivor scenario, you might have additional survivor benefits, one being the death benefit. If we flip over here, we can see that the death benefit is at the moment $2,500. That's a flat rate one-time benefit when you pass away. So that's a one-time benefit that your partner will receive. And if you have children under the age of 25, especially if they're still in school, there is a benefit for children as well. That amount, if we go over here, is a flat rate $294.12 per month. So that's a monthly benefit that they're going to receive if you were to pass away and you have children under the age of 25 and they're still in post-secondary or still in school. So there are some criteria around that, depending on not if they qualify, but that's an additional benefit if you were to pass away very early on, have a very short life expectancy. Now, if you're looking at retirement planning, there are some specific things that we want to keep in mind here. So if you are over the age of 65, the CPP survivor benefit is based on 60% of the contributor's retirement pension. Now, when they say retirement pension, they don't mean the earlier amount if you start at age 60 or the later amount if you start at age 70. What they're really talking about here is the calculated amount that they would receive at the age of 65. So it does not matter when the deceased started their pension. What matters is what the calculated amount was, as if they would have started at age 65. So here, if you are age 65 or older, you're going to get 60% of their retirement pension, their calculated amount as of age 65, but only if you are not receiving other CPP benefits. So the only time you're going to get 60% is if you are over the age of 65 and you have not started CPP yet. That's an important thing to keep in mind, because the integration of those two benefits, which I'll show you an example of in a minute, will typically mean that you're going to get less CPP survivor benefit than you think. Now, if you're before the age of 65, it's different. There is a flat rate portion that you're going to get. So there's a specific dollar amount that you're going to get no matter what, and then you're going to get 37.5% of, again, the contributor's retirement pension, the calculated amount as of age 65. And again, that's if you are not receiving other CPP benefits. So if you're under the age of 65, but you're over 60, let's say you've started your CPP at 62 or 60, the amount that you're going to receive is not the flat rate plus the 37.5%. It's going to probably be less than that. There's probably going to be some sort of integration penalty there, some sort of reduction. So again, this is only if you have not started your CPP benefit yet. Now let's take a look at what this looks like in an actual plan. I'm going to show you the pre-65 amount, the post-65 amount, and then I'm going to show you the integration amount, because there are two reductions that happen when you start your CPP benefit. If you're the survivor, and you have to integrate that with your CPP survivor benefit. So when you start your CPP pension and integrate it with the survivor benefit, there's going to be two types of reductions. One is it's capped, so you can't get more than the maximum when you started your pension. And there's an additional reduction that can mean that you're actually going to get less than even what the cap is. So a couple impacts there. Now let's take a look at that example and I'll show you exactly what that looks like in an actual retirement plan. Okay, so here we've got Alex and Emma's plan. Alex and Emma are in their early 30s. And what we've done in this scenario is that we have taken a look at a survivor scenario where Emma passes away quite early on within the plan. Now there's a couple of impacts here. So one, there's going to be a term life insurance payout. So there is a benefit there for Alex if Emma were to pass away early on in the plan. There is obviously a little spending change here. We're reducing spending a little bit. But overall, the plan looks good thanks to that term life insurance. But what we're really interested in is what happens to Emma's CPP benefit? What does Alex receive? So let's go down here to the table. We're going to open up Alex's income columns. And specifically, we're going to be looking at this CPP survivor benefit. So the platform is going to calculate this for us. It's calculating that if Emma were to pass away, we're going to get a benefit, a survivor benefit for Alex. It's going to be a fairly small amount, probably because Emma hasn't made a lot of CPP contributions up to this point yet. So her calculated CPP amount as the age of 65, it's going to be quite low. But Alex does get the benefit of that flat rate portion. So Alex will be getting some survivor benefits here in his 30s, even though there hasn't been a lot of contributions for Emma. Now, if we roll forward, we're going to see that growing with inflation. What I'm particularly interested in is what happens here when Alex turns age 65. So remember, there was that sort of difference. If you're pre-65, the calculation for CPP survivor benefit is different than if you're post-65. And we can see the reduction here. And that's typically what happens, is that we'll see a reduction in CPP survivor benefits as somebody goes from 65 and earlier to 65 and later. So unfortunately for Alex, we're going to see those benefits go down. Now, luckily, we do have old age security starting. Now, this is the inflation adjusted amount. We're looking in future dollars here. So of course, that's lower in today's dollars. Now, this benefit does go down at the age of 65. We lose the flat rate portion, even though we gain the percentage. We go from 37.5% to 60% of Emma's calculated 65 amount. That doesn't make up for the loss of the flat rate portion. So unfortunately, the CPP survivor benefit does go down at that time. Now, the other thing to notice here is that we've got Alex delaying CPP until age 70. That's probably smart, because what we can see here is that when we get an integration between the survivor benefit and Alex's CPP benefit, we see another reduction. So again, there's a cap on how much CPP Alex can get. It's the cap based on when he started the CPP benefit, what the maximum was at the time. And there's also a second reduction that can take place. So whichever one is greater, that's what's going to be used. So in this case, we've got a reduction again when Alex starts their CPP benefit. We see reduction in the survivor benefit again. And again, this is future dollars amounts. This also includes all of the CPP enhancement that's happening for Alex between now and age 70. So there's a lot of CPP enhancement that Alex will benefit from. But what's interesting is that we see a reduction here going from pre-65 to post-65, and we see another reduction when Alex starts their CPP benefit because of the integration between those two. So a lot of nuance when it comes to CPP survivor benefits. You've got pre-65, you've got post-65, and then you've got the integration of those benefits. All three are important timelines, important milestones within a retirement plan. Now, as you can see, retirement decumulation planning can be quite complex, especially when it comes to survivor scenarios. Even the CPP survivor benefit can have different points in time, different amounts at different points in time, depending on decisions around when you're starting your benefit as well. So lots of nuance there when it comes to retirement decumulation planning, especially in a survivor scenario. I would highly recommend that you create a retirement decumulation plan, one that assumes you both have a long and healthy retirement, but also two alternative scenarios. So one scenario if you were to pass away unexpectedly earlier on in retirement, and one if your spouse or partner were to pass away unexpectedly earlier on in retirement. There are a number of big changes that happen within a retirement plan. If your partner or spouse were to pass away earlier, CPP survivor benefits is just one of those. And again, you might make different decisions on when to start your CPP benefit, knowing that there's a reduction in the integration of those benefits if you are receiving a CPP survivor amount. So again, retirement decumulation planning, can be quite complex. I would highly recommend having 3 different scenarios, a long and healthy retirement and 2 survivor scenarios if you've got a partner or spouse in retirement. Thanks for watching. I would love it if you like and subscribe to the video. We're going to be coming out with new videos on a weekly basis focused on retirement decumulation planning and some of the nuance and different strategies that you can use to maximize your retirement plan. Thanks for watching.